What is going on, guys? Today we're going to talk about a stock that I have never talked about before on this channel, and that stock is Amazon. They recently announced earnings and the stock is down absolutely massively, and we're going to go over why that is, what happened that kind of affected their earnings, and then we're actually going to go into how to price this stock. We're going to look at it from a different kind of way that people tend to not look at. We're going to compare it to other companies in its sector and kind of get a feel for where the PE ratio should be. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So as I said in the intro, we're going to take a look at the stock. So Amazon stock is what we're looking at today, and right now you can see over the last 5 years, obviously Amazon has had a huge run. What's very interesting about their chart is they trade sideways for long extended periods of time, and then they have really kind of quick fast ramp ups, and then sideways for an extended period of time, and then a quick fast ramp up, and then we've traded sideways for a period of time, and now we're actually seeing a big pullback, which we also saw last time they ran up, that the stock pulled back and then kind of leveled off and worked its way up. But now we're seeing a pullback, and this one is kind of feeling a little bit different for Amazon. It's feeling like there's something has changed in the market that they kind of announced with their earnings and their guidance going forward. So what's really kind of crazy is in the last 5 days it's down 14 or almost 14%, which is an insane amount for Amazon, and that all comes on the back of their earnings over the last kind of couple days when they released Thursday after hours. So the question is, what happened during their earnings call that sent Amazon stock tumbling so far down? And what we have here is Amazon actually reported a loss of $7.56 per share, and that was huge. So most of that loss actually came on their stake of electric vehicle maker Rivian, whose own stock basically imploded since its IPO, all the way down 82% basically since their IPO, and that accounted for a $7.6 billion loss in the first quarter. And what's interesting here, so Amazon's net total loss was only 3.8. So obviously there's a difference here between the 7.6 and the 3.8. And that 3.8 accounted for the $7.56 per share loss, which is compared to an $8.1 billion profit a year earlier, so for Q1 last year. And just to jump back, so they actually recorded a $7.6 billion loss on Rivian and a $3.8 billion loss overall. So really what that's telling you is they still had a profit here of around $4 billion, but it's still, that's only half of what they had a year earlier. So investors are looking at this and they're seeing a company that is basically kind of slowing down and had a very rough Q1 overall. I mean, the Rivian thing alone is a very short-term thing. I mean, they have those shares in that company, and I don't know if I assume it's a actual loss where they sold out of part of their shares in that in Rivian. But the other question would be are they just holding it and they're accounting for the loss? Are they buying back in? Like, I don't know the details on that, but overall, investors are kind of looking at this and seeing that the company is slowing down. And here's another thing. So the Amazon revenue only increased by 7% during the quarter, which is the slowest growth rate for any quarter since the dot-com bubble. 7% is still a relatively huge number. I mean, if you do that right over the year, you're looking at 28% over a year, which is still massive for a company to be able to increase their revenue by 28%. So that's still good, but it's slowing down clearly, since that's their lowest quarter since the dot-com bubble. And then here's another big thing that sent the stock down is Amazon's forward guidance for the second quarter was lower than analysts expected. Basically, they projected sales between 116 billion to 121 billion, and that's basically lower than what analysts had predicted of 125 billion. So overall, a lot of negativity around this. The earnings guidance, that kind of for next quarter, that only kind of excites me, because when they guide lower, that just allows for them to basically beat expectations in the future. I mean, hopefully, obviously, if they guide lower and then they still miss, then that's even worse for the company. But a lot of this kind of gets priced into the stock, and they're just guiding lower because they know there's other factors. They don't want to guide high and then miss and then be tumbling down again. So the guiding lower is kind of a safety net where they can guide low and then beat them, and then have the stock not be as affected. And this Rivian loss, I mean, obviously that's bad for the business, but Q1 is always the worst quarter for a company like Amazon, they're, you know, always a back half company. They're third quarter, fourth quarter, when people are starting to ramp up Christmas sales, things like that. So overall, I mean, it seems very short term to me, but I also completely understand why the market has reacted so negatively, especially with all the macro factors going on behind the scenes as well. So what we're going to look at next is basically a projection. We're going to use PE ratio of basically Amazon and where we could see it going in the future, and basically kind of figure out where the price could go depending on the PE ratio. So this is kind of something that I enjoy doing. I like looking at this and seeing. Amazon is a very unique case though, because Amazon has always traded high, and what we'll see here, so this is a graph down here of Amazon's PE ratio over time. So Amazon's PE ratio over time, they have gradually been, you know, decreasing and decreasing their PE ratio, which is very interesting. So, right, there's only two ways that happens. Either the company continues to make basically a higher earnings, right? So the E in the PE ratio, because you're looking at price versus earnings, either the earnings are increasing or the price is decreasing. And what we saw from, you know, Amazon's chart right now, we're looking at what is around 2018 to current time frame. And what we saw from Amazon's chart is the price has only basically increased, which tells you that their earnings have been increasing and on a good trend. So overall, though, right, the PE ratio is still falling. So what investors are clearly kind of doing and have been doing over you know, extended period of time, and we can kind of zoom this out even a little bit further, is that they've been trying to price Amazon and price it in a way that is efficient to where other companies are at. And it's been difficult because, you know, they've priced it very high in the past, and now it's kind of been coming down and kind of falling back down to earth. There's something in basically a book that I've read, The Intelligent Investor by Benjamin Graham, that a PE ratio, I believe it is over 60, he states in that book is unsustainable over the long term. And we've kind of seen that with Amazon, right? They've sat at a very high PE ratio for a number of years, and over time they've kind of resorted back down you know, below 60. So recently, you know, in the last year or two, they've actually fallen below that 60 mark. So that's very interesting, and we're seeing it to kind of continue to fall. So the question is this the time, you know, when Amazon actually starts reverting down to a PE ratio that's more in line with, you know, what value investors would expect, of around like 25 to maybe 30 to 20. And a lot of big tech companies like Apple, Google, Microsoft, they have sat around, you know, a 20 to 30, maybe 35 when the market's kind of priced at the higher end for a number of years now, as they've kind of aged and gotten into that group. And it's kind of like, I guess what I'm feeling is that Amazon is starting to get to that point. So here in a second, we're going to take a look at what the price will be if that happens in a very basically short amount of time, if the PE ratio reverts to numbers like 20 to 25 to 35. So there's a number of PE ratios out there, and for this video we're going to just use this one. So this is 42.66. On Yahoo, you have a few different numbers. So you have a trailing of 44 and then a forward of 52. And if you actually jump back, so Yahoo even kind of contradicts themselves, because if you jump back to the summary, they even have a PE ratio of 38.35. So no matter where you look, they're kind of all different. And that's kind of a struggle that you always have when finding an accurate PE ratio. So we're going to just use this 42 number because it seems to be the most kind of middle ground. So what we have here is, right, the price of Amazon stock right now at $2,485 with a current PE ratio of 42.66. And what we're going to look at here is what happens if the PE ratio falls to 20. So again, this is over a short amount of time with basically no change in their earnings. So if there's no change in their earnings and the price falls to the equivalent of a 20 PE ratio, we would see a price of $1,165. And this would be a minus 53% return from its current stock price. Again, how realistic is that? I don't know. But if the market feels right now in the next couple months that Amazon is only worth a 20 PE ratio, this is what the price would go down to. And now here we're going to look at what it would be, I believe, if it's a 25. So yes, a 25 PE ratio. here. So if the stock were to fall and the market wants to price Amazon as a 25 PE ratio, you would see the stock fall all the way down to $1,456, and that would be a minus 41% return from its current price. And then last up here, I believe we have 35%. So we have seen recently a lot of companies like Microsoft and Apple kind of range towards the top of their PE ratios, around 30 to like 35, somewhere kind of in there, as the market's kind of been, a little bit on the more expensive side. And I'm talking maybe like six to 8 months ago, when the market was, a little more expensive, when all the small caps were, trading at their highs and whatnot. So if Amazon were to go only down to a 35 PE ratio, you would see it drop to $2,038, and that would be a negative return of around 18%. So overall, these are, I would say, these price targets or these PE ratios are fairly low for Amazon. I mean, as you've seen over their history, but at some point, it's kind of all companies mature to a stage that they revert down to here. I would expect them to go down to these PE ratios maybe over the long term, so over a few years, and thus, the price never actually falling back down to this mark, because they'll increase their earnings over that time. But if in the snap of a finger, investors said, hey, we don't think Amazon's worth a 42 PE ratio, we think it's only worth a 20, I could easily see it falling down to, around $1,200. So that would be a very interesting buying opportunity, because Amazon still has a lot of growth. I mean, they've still, grown the company, acquired a lot of good companies. I mean, like Twitch, Whole Foods, things like that. So they still have a lot of growth ahead of them. So if it were to drop down to 20, I would be very, very interested in the stock. But right now, it's just so hard to price the stock at a 42 PE ratio. The last thing I wanted to go into here is basically where analysts are actually looking at the stock. So a lot of these probably haven't been updated yet. Analysts are probably still running their numbers after all the earnings and trying to figure out, where they're pricing the stock. But according to Wall Street Journal, as of right now, there's 42 analysts saying that it's a buy, 7 saying overweight, 2 saying hold, and then 1 actually saying sell. And that 1, it looks like a month ago, was still probably saying sell, which would have been very smart for that guy. He kind of looks smart right now with earnings tanking. But overall, where analysts are pricing the stock at, we've got a high of 4,250, we've got a median of 3,725, and then a low of 2,250. So still not even close to where a 20 PE ratio would be at, and an average of 3,718 or 19. Sorry. So what's interesting is we'll see probably a lot of price targets get slashed. So I would expect this number to go down. But just for the sake of this video, let's look at kind of what that return would actually equate to if you purchase the stock now and it went up to that number. So right now, the stock is at 2,485, and if it were to go up to 3,719, you would see almost a 50% appreciation in the stock. So kind of interesting there. Like I said, that's still probably preemptive. A lot of those analysts are probably going to slash their price targets as guidance has kind of changed. And really, I feel like a lot of analysts just look at stocks that fall and say, well, I need to slash my price target because the stock has fallen. I don't know how in-depth they actually go into the financials and things like that. I mean, if they're good at their job, they do, but you never know. So anyways, I hope you enjoyed the video. Personally, I do not own any Amazon stock. I still think it's really hard to price the stock. I would love to see it actually, at some point, kind of similar to Apple. I expect it to hit a really rough period where it just drops through the floor and drops down to around a 20 PE ratio. And at that point, I think it becomes attractive, because it's kind of similar to Apple, where Apple at one point back, maybe 2017, 18, it dropped very, very low. It was down at like a 15 to 20 PE ratio, kind of what we're seeing with Facebook right now. And over time, Apple kind of proved that it's a great company again and again and again. It keeps proving that it's a great company. And maybe, like I said, 8 months ago, it was around a 30 to 35 PE ratio, which is huge for a company like Apple that's so massive. So I'd love to pick up shares of Amazon if it drops down into that range, 20 to 15. That would be a very, very interesting price for me, where the stock would be very undervalued in my opinion. So, but as of right now, not a buyer. So let me know your comments on Amazon stock. I'd be very interested to see, are you purchasing shares? Where do you think the price is going going to go over the long term? How do you feel about the business? Things like that. So if you liked the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As always, have a wonderful rest of your day.